We're coming out of COP28, looking ahead to, obviously, we have COP29 coming up later this year. But I want to sort of look back a little bit. COP28 was historic. We saw the commitments from 192 countries to transition away from fossil fuels, commitment to triple renewables investments by 2030, operationalizing the loss and damage fund. And yet we had Al Gore on Bloomberg TV the other day sort of saying he is worried about countries already trying to wiggle out of their commitments. I think we had the Saudi Arabian energy minister talking about some of this is optional or everyone has to find their own path to it. Do you share those concerns that some countries will try to wiggle out of what was agreed?
Well, anytime you have 192 countries, companies, individuals, maybe not everyone's going to move at the same pace. You're always going to have those issues. But what is different, and am I allowed to mention Bloomberg in this? It sounded like you prohibited it there. Yeah, I've got the microphone. But one of the things that platforms like Bloomberg do is provide that accountability. So just to be clear, and one of the things we're doing related to COP, when I say we, I mean the UN, is building an accountability mechanism with the very sexy name of Net Zero Data Public Utility. I said it was going to be tough to sustain the previous conversation in this. But the point of that is it is globally available, open source. Everyone can tell what individual bank is doing, individual company, on aggregate versus country, relative to their commitments. That's what's being built up. All the major data providers are part of that, and some of the biggest platforms are providing, the supports of the programming, and the code is all there. So I'd say that first thing. The second is that what was useful about this COP, and if I want to go back to what's useful about this COP, is that there was a discipline around the process that was focused on the climate physics. We all know this is about, I think we all know, that this is about the stock of greenhouse gases in the atmosphere, which is driving climate change, which drives the extreme weather event, and the very human suffering today and tomorrow that we've built up. And it's about arresting that. So what the COP president did was focus on the biggest chunks of emissions that they thought could be addressed in the short term, while also building up those types of 192 country agreements that you referenced, John. And they looked around. I'm going to simplify a bit, but they looked around and said, well, what's one of the biggest is methane. Methane, including methane flaring from the oil and gas industry. It's there's different ways to do the calculation because methane has a shorter half-life than other greenhouse gases, but it's basically 5% of emissions. And the president said, well, wait a minute, we know most of the people who do this. It's the major oil companies, it's the major gas companies. We have their phone numbers. We'll call them and we will challenge them to get to zero methane by 2030. And while they're at it, doubling or having the emissions efficiency of their other Scope 1, Scope 2. So that while we're using hydrocarbons, and we're trying to get off them, but while we're using them, it does the least damage as possible. And that is a side deal, if you will, but it's a side deal with almost 50% of global oil and gas production that is signed up to it. You will be able to see who meets that and who doesn't. Not least because of satellite technology, not least because of public disclosure requirements and other aspects. So you get tracking in real time of some of the most impactful aspects. So I think the COP process, we need everything. Climate is a massive and. We need social pressure. We need NGOs. We need intergovernmental agreements. We need companies doing things. We need data so we can track everything. And what this COP did is some of those big ones, but a series of agreements that not everyone signed up to, but those who, enough companies and countries signed up to those that had a short horizon by the end of the decade, and candidly a way that can be tracked who's producing and who isn't. So in those respects, it was good. Last point, and I'm going to put this in some context, which is if everyone does what they said they were going to do.
Big if.
It's a big if. But if everyone does, a third of the gap of the emission reduction that's required between now and 2030 will have been covered by this COP. Now, do not misinterpret that. There will be ones who fall behind. There will be some that outperform. And there's a reason we have to have another COP. And there's a reason why we have to continue to amp up ambition. But that's a pretty good year's work. We need to repeat that this year. We need to repeat it next year.
So is it peer pressure? I mean, it sounds like part of what you're saying is peer pressure will keep people honest.
Peer pressure keeps people honest. But also what's happening is the greater sense of inevitability, that accelerates progress. So if this is going to happen, then companies and countries start moving more rapidly because it gives them an advantage. Yeah. That's the lesson. You know, for a long time, for whatever reason, I was a central banker, I was a financial regulator, and after the financial crisis, we put in a bunch of measures that made banks much stronger, cost a lot of money, and so we said, well, you don't have to do it for 7 years. But guess what? All the banks were like, well, I don't want to be the last bank to do it. And the best banks brought it forward because it gave them a competitive advantage. If this were a Bloomberg screen, it would show us share price, you know, a correlation with those who acted early, their share price went well. It's the same with carbon. It is now the same with carbon. So the more that it becomes clear, for example, and this, you know, we may talk about politics later, the more it's clear that you can't sell an internal combustion vehicle in Europe after 2035, the more you want to be in that position early on, because you're going to get not just the sales and the expertise, but you get the knock-on financial return. So it's peer pressure, but it's also financial return.
So let's talk to COP29. Obviously, every year we have a new COP. This year it's about climate finance. I mean, it's always about climate finance, it seems in many ways. But this year it's all going to be about how can we get governments to agree, the rich North, to pledge more money. So we just about heaved ourselves over the line of getting to the $100 billion every year. Now we need to up our ambition. What to you sounds like a gettable target for which countries to agree?
Oh, God. That's a very difficult question. It's the one bit of climate finance that I don't work on for a couple of reasons. One, these are decisions that are taken, you know, on an interstate level, intergovernmental level, not very well. The process, number two, the process doesn't work very well. Number three, well, it's important. The orders of magnitude, well, the governmental stuff is important. It's important for climate justice. It's important for certain things that the market, in big quotation marks, won't fund. The orders of magnitude of impact that we can have on the private side, shifting the private side, is much larger. You need both, but it's much larger. And so with respect, you know, from Paris, basically from Paris through Glasgow, this COP, some major advances in private finance that have helped move, and I think, you know, we should all step back and recognize this, that if we go back to Paris, in the broadest coverage of clean energy investment, green energy, electric vehicles such as there were then, charging infrastructure changes, it was $500 billion a year. It was about $1 trillion of oil and gas infrastructure investment. As you guys track, that is now flipped. It's 1.8 trillion clean last year, a little less than $1 trillion in oil and gas. So it's now almost 2 times as much. Now it needs to keep going, but part of that, a big chunk of that was unlocked by reforms on the private finance side, starting with something as simple as just climate disclosure, which was launched in Paris.
But looking at the amount of, I mean, do you think 500 billion, is that going to be too big of an ask? Do you think it is?
What, of governments?
Yeah.
Look, you know, John, you're asking me a question that I have. I'm trying to avoid it. I have zero visibility on what's going to be cut on the government side, and we also have a COP president that was just named literally weeks ago. So it's a very challenging task. What we can't, and those who are tasked with it need to deliver. I'm not absolving them of anything, but it just makes the work on the private finance and the blended finance side, which is blending public money, World Bank money. You have Ajay here. I'm sure
he's speaking tomorrow morning.
He's speaking tomorrow morning. Okay. Well, Ajay will answer all these questions. But you know, taking Ajay's money, if you will, the World Bank's money, and not getting less than $1 of additional money alongside that, but getting $3, $4, $5 for every dollar that the World Bank puts out into the emerging and developing world. That's the prize, and that's what we're as much focused on over the course of the next several months.
Talk to us a little bit about Brazil next year. We had Marina Silva in here last night.
Fantastic.
And, you know, she's already, I think, a world figure, but I think the world is going to be hearing a lot more from her. Incredibly inspirational figure. You've been working already very closely with the Brazilians ahead of that next year.
Well, I think with no disrespect to the COP process this year, it's important. We've got to get everything we can out of it. But recognizing that Brazil is Brazil, So in and of itself, what happens in Brazil is critical for the climate, first thing. Secondly, they are G20 president this year, so they're driving the agenda in the G20 and obviously COP president next year. And they are very, very ambitious, which is good news. The Ecological Transformation Plan, which I'm sure she spoke to, and we'll all hear a lot more about it, is significant in and of itself, but potentially very significant in the respect of it can help create whole new financing flows around biodiversity, around nature, at a scale that's material. Now, notice that everything I said was conditional because a huge amount of work has to be done in order for that to be the case. But that's absolutely the focus. And I really commend the Brazilian government as a whole and the people behind it for the scale of this ambition. So I think what they're doing is as significant, is the most significant thing in climate.
Now, I'd like to turn to climate investment. It's been a tricky year. I think if you look at what's happened to onshore and offshore wind around the world. I think the S&P Global Clean Energy Fund was down 24% last year. Obviously, that's the mirror of what the S&P 500 actually did. It's been tough out there. We had Ray Dalio, I think, speaking today in Davos, saying investors want to invest in green. But they're only going to do so if there's a return. So what is your, I guess, elevator pitch to investors who are looking to get into green technologies, green industries, et cetera?
Let me put a couple of things, just to put context on it. The world put $1.8 trillion into clean energy last year. 1.8 trillion. Like, none of those factoids and the anecdote from Ray, or the words from Ray, who I respect, Ray, like, there's a massive disconnect between the two. That 1.8 trillion is going to make a very good return. Not every single investment, but the whole thing will make a very good investment. Elevator pitch, funny you should say, I actually do make an elevator pitch for clean energy investment for Brookfield, one of my roles, because we run and have set up one of the early stages, but arguably, I'll just say one of the biggest transition businesses in the world. We have more than 25 gigawatts of clean power in operation. We're a major operator. We have 150 gigawatts in our backlog. We set up a transition fund, the largest transition fund at the time, $15 billion. We deployed all of that capital effectively within 18 months. We'll make very good returns for our investors. So we've deployed it through this, quote, difficult period. And if you care about the climate, which we do, and our investors very much do, and I think by self-selection this room does, that $15 billion takes out the equivalent of emissions of New York, London, and Toronto, I'm Canadian, combined. Okay, that's the order of magnitude of impact. So if you focus on going where the emissions are, because you get paid for helping to solve climate change, and that's now the reality, you get paid more for doing that in the advanced world than you do in the developing and emerging world, something we've got to fix with policy and finance. But because you get paid, you can both have a massive impact and make returns for your investors. So the elevator pitch now to investors is to the effect of track record there, scale of opportunity elsewhere, and I'll speak maybe more generally. We are looking to and expect to raise more than that, significantly.
How much
so that
more?
We can continue. Well,
you had to guess.
I'm trying to remember what we're allowed to disclose at the moment, but we'll watch this space. We'll give guidance, updated guidance with our results.
But we are in a higher interest rate environment compared to where we were 4 or 5 years ago, and obviously we've seen VCs in retreat here and there. Is this something of a buyer's market for Brookfield? Do you see this as an opportunity? When you look at startups.
Okay. So we're talking about different things. So make sure. So what we're doing is deploying wind, solar, storage, some hydrogen at scale, nuclear as well at scale, wherever we can do it. It is there is in a world where that deployment, and I'll use dollar figures, where that deployment got up to 1.8 trillion, as I keep mentioning, and needs to go to 4 to 5 trillion by the end of this decade. If you can do that, it's not quite a buyer's market, it's an investor's market. there's a huge range of opportunity, and we want lots more people to come in and do the same thing because there's just such a range of opportunity. On the climate technology side, I think, I mean, we're all familiar with the issues that have happened in VC. It is a better investing market in VC in general than it would have been at the height of the hype and the low interest rate environment. It is, I think, increasingly clear which technologies will be critical. Not all of them. Somebody will come up with something new. Which technologies are critical, and the rough timeline of deployment of those technologies. And because of industrial policy, centered in the U.S. but elsewhere, the timing of the returns for those has come forward. So that's, I'll be more specific, that's clear on hydrogen, it's clear on carbon capture and storage, it's less clear on direct air capture, but there's still opportunities there.
We are running low on time. I do want to talk to you about politics. I think we have 40% of the world's democracies voting this year, elections all over the world. We saw what happened in Iowa the other night. We've seen, in the UK, some rollback on net zero, problems in Germany, elsewhere. In this election environment, what is your message to sort of progressive climate politicians who are battling the populism, battling the disinformation around climate? Because it just feels like, the anti-net zero bandwagon is getting momentum.
Well, I think the first thing is remember why you got into politics and why you're doing it is to serve people. And if the people you're serving are worried about and suffering under the cost of living, they're worried about their the immediate cost of living crises that exist in many of our countries, worried about their jobs, worried about overall resilience and security. The first thing you have to be dealing with is to address those issues. So you've got to serve the voters, and alongside that, you have to be able to do more than one thing at one time, but you have to start with the immediate. Alongside that, I think if you're going to be in a position of authority in any of our economies, recognizing that the importance of the overall issue, but also the importance of being competitive, to use that brutal word, but will be increasingly brutal from a competition perspective, competitive in climate. All aspects related to climate. So where is Canada going to be competitive in the auto sector? Are we still going to be a competitive auto producer or manufacturing writ large? If we're going to be that, we need a net zero grid, plain and simple. And we need to grow that grid probably by 50%. And so we need to do that in a way that's smart, and that's going to give the returns to the people whose costs you get down, whose housing you provide, but also are going to want a job 2-3 years down the road. So deliver today. Let me flip it another way around, which is that if you look at another country I'm familiar with, I haven't looked at the manifestos as they call them in the UK. I guess they're not out, but what is one of the biggest issues in climate in the UK? It's the housing stock. It is one of the worst housing stocks from a, I'll simplify it, insulation perspective, climate efficiency. Well, so designing a climate strategy that helps address that, because it's immediate jobs, it's immediate cost of living, it covers the country as a whole. You need to do it. There's ways to do it through a very sophisticated UK financial system that it leverages the mortgage, I won't get into all the details, but leverages the mortgage market. So you can have an immediate impact, you can get costs off people's bills, you can credibly deliver that, you deliver a bunch of jobs, it's tangible, it's not abstract, and so it's thinking in those terms alongside the UK's hydrogen strategy, which the UK has a hydrogen strategy, and will whatever party wins the next election is going to, I think, will want to follow through on.
Are you disappointed at what we've seen in the UK, the sort of the slowdown on the?
Well, I think I have a basic view on this, which, look, the UK has one of the most sophisticated frameworks, to use that term, for climate, because you know exactly how the country is doing, because an independent commission looks at the existing policies relative to the objectives, shows the gap, and then gives options for how to close the gap. And the political system is supposed to come up with those. If you change something in that system, in my view, you should replace it with something better. So if you decide, as the government did, that the UK is not going to have the moratorium on internal combustion vehicles in 2030, but it'll be 2035, well, the simple question should be, okay, well, what are you replacing that with?
Right.
Well, you could replace it with something on the housing side, as I just referenced, or some other policy that is going to adjust for the carbon that is going to otherwise be emitted over that period of time. And there's lots of options to do that. And the political process always should come up with better ideas, better ways of getting there, but subject to that discipline. And what I didn't like, at least what it looked like to me, is that policies were being taken off the table certainly without replacements being put in, and they were being done for purely political signaling purposes. That's what it appeared. And that is not the right environment to keep investment focused and flowing as much as it should. And it's also, it's just not good climate policy, my judgment.